The recession canceled. Over. We have seen an agreement at least start to form with China. We've got our first win between the UK and the US. We're starting to learn a couple of things. We are now understanding that a base rate of 10% tariff will be for everyone. We have a 90-day pause on China, and also China dropped theirs as well from 125 to 10%. Folks, great news. The recession's canceled. 10-year rate going up, oil going up. It is party time. And of course, I'd be remiss if I didn't talk about the stock market being up a ballsy 1,000 points. Thank you so much. Well, Taylor, I don't know about you, but the recession's canceled, man, just like that.
Holy smokes. The euphoria of risk has snapped back into the market. And this is a short unwind on the stock market side of things. That's what's playing out here is all the shorts covered today. We're forced to buy, forcing the market higher. The VIX index is a really important thing to watch. So at 20, it's kind of a line of demarcation. So the VIX is the fear index for those that aren't familiar with the VIX. And essentially 20 is that mark where above 20, it's more concern, if you will. Below 20, it's more optimism. And so as soon as it broke down beneath 20, all of a sudden this morning in pre-market hours, the hedge funds came in and started buying, covering shorts, and boom, you had an explosion higher.
Yeah. So let's play that out for the average American. So essentially what is happening or being unwound is we had a lot of negative sentiment in the market, a lot of people going short, getting puts, all the negative things. Trump makes his announcement Sunday, market closed, a little more details this morning. And those folks have to unwind those bets. They do them really quickly, kind of en masse, and that just shoots the stock market higher. Is that kind of a fair summary?
Correct. And, if you were a retail trader this morning and were like, hey, as soon as the market opens, I'm going to jump in. It's like, that passed you by 4 hours ago in the pre-market trading by the hedge funds. So it was vicious. It was rapid. And the movement was euphoric in short order. I mean, if this was not in the realm of if this wasn't in a time frame where we had a 10% day a month ago, this would be like, whoa, this is absolutely seismic, etc. But we've seen obviously this trade on, trade off, tariff on, tariff off nature cause just hyper volatility in the market. And today it's to the upside, thankfully.
Yeah, one of the things that I've been thinking about, and I think you and I actually talked about it last week, was a notion that I had called peak uncertainty.
Yep.
And I postulated 10 days ago that peak uncertainty might have been behind us. This was actually before the UK announcement. And, getting behind peak uncertainty doesn't mean it's all sunshine and rainbows. It just means it stops getting worse.
Right.
And, it does kind of feel like we're in a very long tunnel, and it's probably a tunnel that has a curve in it. So when you're in the tunnel the first time, it's just dark. But now we're kind of rounding the bend and we're starting to see this little speck of light in the distance.
Yep.
It's probably still months away.
Yep.
But that's how I kind of feel about this peak uncertainty. I think it's going to prove to be a pretty good call. What do you think?
Yeah, it's interesting. I mean, there's still obviously a ton of uncertainty, not as much as there was before, to your point. Like the peak of, okay, where do these tariffs settle in? That's still there, right? To be clear, this is a 90-day reprieve on the tariffs that were set. So we don't necessarily know where tariffs will wind up, being with China, which is, the second largest economy in the world. We had an embargo, and Scott Bessent, Treasury Secretary, literally said, we have an effective embargo where we cannot trade with China at the current rates of 145 and 125. And so, yes, that has abated some, no doubt. And the market has responded in short order. But I think there's still a fair amount of chewing through to happen here, right? It's now 30% tariffs from our side, 10% tariffs from their side. And it's 90 days out. We don't even know what a reset would look like if it went back to this delay on tariffs. Does it go back to 145 and 125 if we don't come to terms? Nobody knows. But it was interesting going into the weekend that Trump on Truth Social said that I think 80 is a good number, meaning 80% tariffs on China. And we come back effectively with 30, which was a seismic move. And I think that having Scott Bessent negotiate these is the biggest win that we've ever had, right? If we put Peter Navarro or Howard Lutnick over there, or Trump himself, like you just don't know what's going to come out of those negotiations. But Bessent is the calmer mind. He is a billionaire that was all made in public markets. He understands how and why things react well. And he has stuck to a very strict script, right? He says we have a plan in place, we have a process in place, and we have a mechanism. He said that like 5 or 10 times, those 3 words.
Yeah.
And
he's remarkably consistent and measured. He is the right man for the job. We are very lucky to have him as Treasury Secretary, kind of being that calm but firm voice and consistent. He's remarkably consistent.
Agreed. And the market rallied every single day for 10 straight days, right? It was the longest running streak we've had since 2004 or whatever. And every day you turned on CNBC or whatever, it says traders excited about potential trade deal. And it was like, okay, excited about this potential trade deal. We don't know what it is. And granted, I think we still don't know what it is. But at the end of the day, we've shown that we will bend a knee or force others to simultaneously bend a knee, maybe is the way they would like to put it. And which of those is true at this point? We don't know because we don't know any of these trade details.
Yeah. But, again, I'm not sure that these trade details really make sense, or I shouldn't say make sense, are important for the economy, right? We were staring down the barrel of a recession, and it could have been a pretty bad one.
Yeah. Let me, if you don't mind, let me cut you off there, because I think we're still staring down the barrel of a recession if we don't get EU, Mexico, and Canada as well. Like we got to get something in short order on those as well, because Mexico and Canada are bigger trading partners to us than China is. So, but your comments are all very fair, because this just shows directionally we absolutely want to do something, which before it was like, I don't know if they are trying to get a real trade deal done, and it shows we're there.
Yeah. So again, this is, I think, the most important question right now for me is can the recession be avoided? Because I was on the cusp of going, we were about a month away from, if this embargo stayed in place, from really a lot of bankruptcies and layoffs in the kind of small business sector. That was coming. I don't know if it's still coming. I certainly think some people will still be hurt and can't make this work, but I think a lot of people can. The thing I said on the daily financial news today is, do you know when a 30% tariff feels good?
when it comes on the back of 145.
Exactly. Because again, 145, to your point, is an embargo. 30% isn't.
Right.
So, again, is this enough? Is this enough to escape a recession? Maybe. The other thing I think that is important, if you were to stack up our trading partners and go, which is the hardest, I think 99% of people would have said China.
Yeah.
Right? People
agree. And I would have been in that camp as well.
Yeah. So the fact that we, got some kind of skeleton agreement where both parties kind of backed away from the embargo is a sign to me that EU, Canada, and Mexico are coming. I mean, it's just a logical kind of series of events.
We're better friends with them. Like, let's call a spade a spade. Like, we do see China as an adversary. We see the others as an ally. And I do think that our allies have been a little hurt by us in our actions. So maybe it wouldn't be as easy to strike a deal if we didn't they feel like they've been backhanded. If we didn't backhand them first, it would have been easier for them to make a deal. But I think there is this prevailing noise in the market that China has a 100-year plan and that they can wait things out. And again, I don't know whether the market's making too much of this. It's not making enough of this. I don't know, because we don't know where things are going, right? We just caused a pause. We said, hey, time out. Like, okay, stop fighting. Get to your corners. Yeah. Let the cut man come in and put some
patch everybody up. Yeah.
Patch everybody up. And then y'all can kind of come back to normalcy and talk with hopefully a more level head. And hopefully that is what the market's responding to, and hopefully responding correctly to.
No, and again, I've often said and still believe Trump's got 6 months. And again, if I'm right, he got past peak uncertainty. It's all going to be good now. And what that means for this 90-day pause is he will get an agreement done come hell or high water, because he can't have this go past July 20th, which is the 6-month mark, because then he risks the midterms. And he can't get anything done if he loses in the midterms, right? He'll be a lame duck for 2 years. He doesn't want that.
Yep. No, that is very fair, but we still have budgets. Budgets
No.
are coming here. And that's another one that is going to be a battle that's battle royale. Okay. We want to cut taxes, but at the same time, we thought we were going to be able to cut a little bit more on the Doge efficiency front, which wound up being 160 billion as opposed to 2 trillion. And 160 billion is what the current administration's saying. So maybe that's a little bit optimistic as well. But yet we want no tax on tips, no tax on Social Security, which is a bigger one, no tax on overtime. I just heard Trump say on the news, no tax on or a deduction given for loan interest paid on a U.S. purchase of a car. So if you purchase a U.S. car, you take a loan on it, you'll get a deduction for that loan interest rate. And then, there's so many questions around everything. What is an American built car? Because Ford just got absolutely pummeled being an American company, but tariffs crushed them. So it'll all come to fruition here soon enough, hopefully.
So the last thing to talk about, again, if the recession canceled, I always go back to the 3 legs of the stool, the smallest leg being government. I don't think this tariff does anything for government spending. It's still hopefully being reduced, but I have seen reports that the budget actually gets bigger, which is wild to me, right? We come in with this.
I think it's almost absolutely going to get bigger. This is what every politician says. Yeah, we'll tighten our bootstraps. And then, the time comes where the rubber meets the road and they're like, yeah, but we want to make everyone happy.
Yeah.
And
next time. Yeah. We'll cut it next time. Yeah. It's wild to see. Then I go back to the enterprise, and this is where I'm just not sure. Again, I think a lot of companies and CEOs and leaders are rejoicing this morning, right? Because again, they were staring down the barrel of an embargo that was, there were no moves on the chessboard. You were stymied.
Correct.
Now I think there's moves on the chessboard. I still don't think anybody's going to go out and make big capital deployments, but I think they keep the lights on.
Well, what's interesting is that the big cap tech, which is the money hogs of our economy in general, they never stopped. At least if you believe what they say, they never stopped CapEx. So maybe they had, behind closed doors, a little bit more insight as to no, we are really trying to get things done. We're going to be tough on the front edge, kind of stone face them and then get something done, because it was tough to make sense of the CapEx they were willing to spend given the backdrop that we were in, but they did. And maybe that winds up looking smart. Yeah.
So at the end of the day, I guess, when I look at the recession potentially being canceled, what's the thing to watch going forward? Is it the market right up 1,000 points? Is it the 10-year note rate going up 8 or 9 basis points? Or is it oil? If you're going to tell somebody to watch one thing for the next 30 to 60 days to say recession yes, recession no, which one of those 3 things do you think is most important?
Just because it's been such a consistent trend, not because typically I think it's the best recessionary indicator. Oil has been really the most consistent in the direction. It's been down, reversal, bang, higher. And the 10 years got the wonkiness going on of foreign governments selling into a market that's driven it back upwards. And then the S&P 500 right now is just trading basically on sentiment. And today the sentiment is euphoric. But 2 weeks ago, it began this epic rally, or probably 3 weeks ago now, it began this epic rally. And there was no light at the end of the tunnel at that point. Yeah. And oil was responding accordingly, perpetuating downward further and further and further. There are outside forces that also drive oil outside of recessions, being, cutting of production, et cetera. But there hasn't been any of that. So oil's been the most natural indicator of the direction, in my opinion.
Very cool. So there you got it, folks. For the next 30 to 60 days, watch oil for signs of a recession or not.
Unless, by the way, unless you start having an OPEC come out and saying we're cutting production, because then that throws that for a loop as well. So sorry to make it more difficult, but yes, unless that comes, I think oil's been the best indicator.
Very, very cool. Well, we're going to talk about consumer, the third and most important leg in the stool, in video number 2. We saved that one for its own video. Taylor, before we get to that, where should they go to follow you?
Yeah, you can follow us. We're on Instagram and on TikTok, LinkedIn as well, YouTube as well. We're at LifeGoal Investments on all of them. So
there you go, folks. Do me a favor, follow him on IG or Instagram. I don't know how he gets all that information in a 60-second clip, but he does it very, very well. Give him a follow. Thanks,
Good
buddy.
man.